Hello, everyone. I'm Andrew Schmertz. OPEC made it clear Monday that it is willing to wage an all-out war against the U.S. fracking industry. Despite falling prices and weakening global demand, the cartel voted to keep production at more than 31 million barrels a day and voted down any production ceiling. Now, that drove down crude prices below $40 a barrel, a 6-year low. In fact, how bad is it? If you are so inclined, you can buy a futures oil contract out 10 years now for less than $60 a barrel. This move shocked Wall Street as well, with prices falling across the board. Let's take a look at the final numbers. The Dow Jones Industrial Average down 117.12. It was down better than 200 points, better than 1% for most of the day until coming back a little bit later. It's 17,730. The Nasdaq down 40.46. The S&P 500 off 14 and change to 2077.07. Oil prices have become Saudi Arabia's game to play. Besides sticking it to the U.S., the kingdom is also infuriating two other main rivals, Iran and Russia. For more on the toll this is taking on the energy sector, but also some positives on other industries, is Peter Cardillo, the chief market economist with First Standard Financial. Peter, welcome back to Arise Exchange. So you got a new gig. Congratulations.
Yes, thank you.
New firm. All right.
Yes.
Are what we've seen from OPEC the greatest predatory pricing scheme ever? We have weakening demand, yet they are continuing to pump out the product like everything is good.
Yeah, indeed, that's exactly what's happening. But I must say that OPEC and especially Saudi Arabia is playing a very dangerous game here. You know, their revenues have fallen sharply, and there is really no need for the price of oil to be down this low. This is a war that was declared about a year ago by Saudi Arabia, and of course it's obviously to keep their market share and of course basically destroy the shale business here in the United States. But again, I say that they're playing a very dangerous game because of the fact that we could see some geopolitical backlash if the price of oil continues to weaken.
And we'll get to that in a moment. But first, is it a game they're right now winning? Production, if fracking here in the U.S. is down, and the energy sector is getting crushed, and Russia, of course, is being hurt substantially, which is their goal.
Absolutely. Right now, we're in dire straits. There's no question about that. If you look at the rig counts, you know, they're down substantially from last year. And so at one point or another, I think from a contrarian viewpoint, and I like to be a contrarian, that the price of oil is probably going to rally. I really don't subscribe to $30 or $25 or $15.
That's what we've been hearing.
Although we're not that far away from $30. But
we're a lot closer to $30 than we are the highs.
Exactly. And, you know, what happened today, it was just a technical breakdown which fed on itself, and unfortunately it might last for another day or two.
And when we talk about technical breakdown, we're saying that certain prices were triggered in the market that caused some selling.
Exactly. You have stop losses, you know, feeding on themselves.
So is this a game of chicken right now to see who will blink first?
I think so, and I suspect that OPEC probably in the first quarter is going to have to call an emergency meeting.
And now here's the question. So Saudi Arabia is the biggest player in OPEC, but this is a cartel of many different oil-producing countries, including Venezuela, for example, and others that are getting rather frustrated with Saudi Arabia here. At what point does Saudi Arabia lose its political will? And what point does it just lose its economic will? This is a country that supports most of its citizens through oil production.
Exactly, and with their revenues and their reserves down sharply, that just simply, when I say reserves, I'm talking about foreign exchange reserves, obviously that means that they're going to have to cave in at one time or another. Now, what can Venezuela, the United States, Great Britain, and the rest of the non-OPEC oil producers do at this time? Just bite the bullet.
There is collateral damage here. We see that in other oil-producing countries, Africa, for example, the continent, which has Nigeria as a major oil producer, and other countries within Africa. How long can they go through this right now, especially seeing significant devaluation of their currencies?
Well, you know, you have to remember that most of the African oil, especially the Nigerian oil, is sold in the North Sea market, which is the Brent. And so we're still just at those levels where it's still profitable. Now, if it would to worsen, then, of course, the problem would be greater.
Okay, so looking out, you don't think that we're going to continue to see a slide to the extent that some are saying that there could be a rally in oil. What would trigger that rally?
Well, I think just from an oversold condition, number one. Number two, I guess, you know, we could hear more rhetoric creep up over the next few weeks. And perhaps, you know, it's funny. Just last week, Saudi Arabia, just before the OPEC meeting, indicated that they were going to do everything to stabilize oil prices. And then, of course, just the opposite happened on Friday.
There's a little bit of a head fake.
Yeah. So I kind of think that that rhetoric before the OPEC meeting is probably going to resurface.
Peter Cardillo, good to see you.
Good to be here.